Hello, everyone. Welcome to another episode of the Wall Street Rundown. I'm your co-host Billy. I have Wale with me. What's up, Wale?
What's up, man?
Man, what a crazy turn of events this week, man. Just do a quick recap and see where we're at because,
I don't
bruh.
even know what to say anymore.
So the stock market have rebounded significantly, man. So pretty much we erased almost all the losses from April. So all the losses that we had during Liberation Day pretty much gone. You know what I mean? And again, a complete 180 degrees back to the other way. You know what I mean? And then the S&P 500 has risen over 18% from its April lows. That's crazy. So we were in like we were past correction territory, and we came back all the way up. And I think we're hovering around like 5,900 or something like that. And now we are way past the 200-day EMA. I mean, we talked about the 200 EMA and SMA for a long time. Like, guys, when we get to that point, when we get to that level, that's the good time to start paying attention to that side. And looking at that, it felt like everything kind of just turned bullish out of nowhere. You know what I mean? The Nasdaq has also shown some strength. I mean, if you look at the gains in technology and AI sectors, bro, go look at
Crazy,
Nvidia, go look at all
crazy.
these companies, just amazingly crazy, right? So some of the key drivers, easing in inflations. I mean, we see the inflation kind of came down a little bit. Actually, the 4 year, like in the 4 year, I think they came down to like 2.3% in April. That's the lowest number in 4 years. And what that mean is like, I know we talked a little bit about stagflation and recession and all that stuff. So that kind of ease the concern around that a little bit. And then we have the U.S. trade development. The U.S. government making the decision to pause some tariffs, specifically with China. We talked about that. I was like, nobody really care about the other countries.
Everyone was waiting to see what happened with China over the weekend. And
Yep.
once that news came out that they came to a mutual agreement to pause. Now, I will say this. It's a 90-day pause. It
It's a
is
90-day
not
pause.
it's
Yeah.
not an official trade agreement. So we don't know where things will go after this pause. I will also say that there is still a 30% tariff on Chinese imported goods. So it's
Right.
come down from 145, but the total tariff on anything coming from China is 30%. So
Right.
10% reciprocal and then 20% for the fentanyl. And those are supposed to stay on at least for this 90-day pause. The US is also paying China a 10% tariff for goods going there.
Mm-hmm.
So I guess the market took it as a good omen as far as the start of something that could eventually end up in a good place.
Yep.
We'll have
Yep.
to wait and see. But man, the gap up from this weekend was ridiculous. Wow.
I've never seen futures go up 3-4%. Like that's nasty.
And
But
as
let's
it's
let's let's take it back a little bit before we jump into that. I want to talk about the numbers that came out for the PCE and all that stuff.
for
So
CPI.
CPI, I'm sorry. So the US inflation shows signs of moderation with CPI rising by 0.2%. So CPI is still kind of a little high. But I guess the market didn't care about that. Um, and this brought the annual inflation rate to 2.3%, making the lowest level since early 2021. What are your thoughts on that, man? Because I know we talked a little bit about possibly inflation like going up if you count it from when the pandemic happened to now. I mean, it's low right now in the month to month basis, but overall it was high. But this report is actually showing that it actually went down. So I just want to get your thoughts on that and what's the possible cause of that.
So to me, when I look at the CPI numbers, the biggest helper to bringing inflation down was energy. If you look at
Mm,
oil has been getting taken behind the bleachers and getting
yep,
jumped. It's been
yep.
getting beat up. So that helped with the CPI number. I will say that was a good omen. 0.3%, I think it was 0.2 or 0.3% month over month
Point two.
is
Yep.
still relatively good. And I think CPI came in line with what everyone expected. So there were
Yep.
no scares
Right.
as far as um, inflation getting a little bit hotter. So that's a good thing, but I will always leave this caveat that the Fed does not look at CPI, right? The Fed looks at PCE. So we
Yep.
still got to wait for PCE, which we're going to
To
get
come
probably
up.
towards the end of May. Now, I will say this. I'm surprised that the numbers weren't a little bit hotter than expected, but I do understand because energy was down that did help.
Yep.
But also, we have to understand that we had Liberation Day, then we had a 90-day pause, like almost immediately.
Mm-hmm.
Some people are also saying that we haven't seen the full effect of tariffs yet. We may not see it until May and June, so we just have to stay put.
Right.
But at least for now, the market feels that it is in a safe place, and that we could possibly be moving towards more growth. So, um, yeah, I still feel that there's still some conflicting information,
Yep.
but I am not gonna bet against the market right now.
You really
Everything is
can't.
everything is being driven by headline momentum.
Right. Right.
Everything. So, just go with the trend at the moment. So until we get a catalyst that kills the music, I don't see any reason why you would want to fight this market at this point. So,
You
if you
you
if
you really can't.
that's a dangerous thing to do right now.
Yeah.
So if you look at what causes market downturns, I always tell people that there's always some sort of catalyst, right? Liberation Day was a catalyst that we had. I think the early catalyst that we had early in the year was a lot of the tariff headlines that Trump was threatening early
Right.
on in the year. So
Right. Right.
the only catalyst that I can think of that will stop the music right now is unemployment starts to move higher, right? Which could scare the Fed. Um, PCE moving higher because that's what the Fed is concerned about.
Right.
And then any sort of Fed talk about potentially raising rates. Those three would be catalysts that could kill the music with all of this momentum that's going on.
Right.
Until then, I mean, I have no reason to fight against the market at this point.
Man, I mean, we like I saw somebody put I think you put this up there too. Like, when you look at the indicators, throw that away.
Yeah,
Look at Trump and what he's doing. That's your indicator. You know what I
yeah,
mean? Just pay
that's your
attention to
indicator.
that.
We got a
So,
question in the chat box real
yep,
quick. It says many U.S. companies that begun passing tariffs costs on the consumers have mentioned that they will not be lowering their prices during the 90-day pause or even after a long-term agreement. How do you think that will impact Q2 and Q3 consumer reports? So
it's a good question.
if and that's a good question. So this is how I look at it. Most of these companies that are probably going to be paying higher prices for goods coming overseas, obviously, I'm pretty sure most of them, if not all of them, are going to pass on the higher cost to consumers.
Mhm.
The question that we have to ask ourselves is A, do the consumers stop spending or lower their spending? Or B, does the consumer start to look elsewhere to other companies?
Yep.
That I do not know for sure. If so, here's the thing that I would say could stop the consumer from spending. If we start to see higher unemployment,
Mm.
if that happens and we start to see a slowdown in consumer spending, those two catalysts could really hurt the momentum in the market.
Yep. Yep.
But from what I'm seeing, we're still at 4.2 unemployment. We've been there for quite some times, even though we've been hearing a lot of layoffs going on from different companies.
Yep.
It hasn't necessarily shown up in the job data. So
Right.
until it starts showing up in the job data, to me, the consumer seems to continue to spend.
Yep.
And I like I said, until we start to see something different, I think this the momentum that we're seeing in the market is going to continue.
Yep.
But
The
we'll
other
have
thing
to
to
we'll
the
have to
other
wait
thing,
until Q2 and Q3 to see if we see any impacts at this point.
right. Right. But the other thing you got to think about also is like what are those tariffs actually affecting? Is it affecting the consumer directly, or is it affecting companies in general, right?
Hmm.
So if you look at the food prices, for example, food prices relatively has been, I mean, it's been going up, but it's not like in a scary way where people stop shopping. You know what I mean?
Hmm.
So you're not seeing, I guess you're not seeing a burdensome when it comes to like food. Energy prices, same thing. Energy prices, I mean, it's relatively stable. I mean, there's maybe increase here and there, but it's not like catastrophic to the point where it's like the consumer can't afford to pay anymore.
Hmm.
What is the other one that kind of affect consumer directly? Medical care. Medical care kind of been okay so far.
Hmm.
We're gonna talk about United Health too. I mean, that's some crazy story there. But anyway, medical care too. Like you gotta, we gotta think about it. Like, we as consumers, medical care is one of our biggest expenses too. So is that increasing? Is that going down? Right? Or about how much is it going up? The other thing you gotta think about is shelter costs. Do you pay more for your house now? So it's like those things that affect you directly as a consumer, those is that increasing in a bad way that you can afford to do it. You cannot afford to splurge or go buy some other stuff right now, right? So you still got to take all these things into account when you're thinking about companies pay you know companies passing down the inflation down to the consumers and all that stuff. Now the direct one you probably see is maybe like electronic, right? Looks, think about your phones, your computers, all this stuff. Those you probably see a direct hit in it, like it's going up. Cars that are being made abroad, you might see, those are being passed down to you. So you'll see direct effect when it comes to that one. But
Yeah,
yeah,
I'm still, how should I put it? I'm still in the camp where we may see, because the Fed is anticipating higher inflation. That's what they're anticipating. I think I'm still in the camp where it's like, do we know when it's going to show up or not?
right.
So because again, a 30% tariff on imported goods, that's still pretty, that's not cheap.
Mm-hmm.
Like that's not cheap. So, let's just say you're used to paying $100 for an item coming from China, that now goes up to $130.
Yep.
You're going to feel that to a certain degree.
Yep. Yep.
Um, but not enough to change the market's thesis
Nope.
on uh on how it feels. So
So speaking of United Health, if you guys go look right now, United Health is actually being halted for volatility. That thing is down $21 after hours. And so far this week, it's been down $109 this
wow.
week alone. And this month is down $297. It's down 50% this month alone, right? And I mean, United Healthcare has had such so much trouble when it comes to the way to run, like from assassination of their. I don't think that was a CEO; it was like a VP or something.
Yeah, he was a
Being
CEO of one of their
the entity probably.
departments. Yeah.
So getting shot right dead in the streets, and I think from that time on, they just had a bad timing. So on May 13th, CEO Andrew Whitty resigned for personal reasons. I mean, I don't think it was personal reasons. Some of those things, including like they had a cyber attack, of course the shooting, medical costs, but all of those things that's just happening, man. And then the last thing that just happened after hours, actually, the U.S. Department of Justice has conducted criminal investigation into United Healthcare Medicare Advantage billing practices. Now,
Sheesh.
working in the healthcare industry, there is huge fraud that always happens when it comes to Medicare and Medicaid. If the that's one of the biggest spending wastes of in healthcare is because the government gives you money basically. As long as you can prove that you're taking care of somebody, the government will give you money. So if you start creating like fake patients and fake procedures or billing extra or billing double or billing triple, and the government doesn't catch that, they will pay you for it, right? But then this is what happens when you get caught up in it. So it looks like they get investigated for inflated payments, misdiagnosis. We have this thing called CPT codes. If you put the wrong codes or you put multiple codes that the patient didn't even like, um, the patient was not even diagnosed with certain things, and you just put it in there so you can get paid some more. So they are in deep trouble. I will not be surprised if they got removed off the stock market real soon. I will not be surprised.
Getting delisted.
delist it because this is getting out of hand. Depending on what the Department of Justice find, I mean, this is not good for United Health at all. But if you would
And
have had puts on him, some of those puts 3,000 would have been like 300,000 or something like that. Because this thing was like some of those positions were like 10,000%. You know.
yeah, I'm looking at the chart now. It hit a high of $615
Mm-hmm.
in the aftermarket on 413, and now it is at 281. That is a disgusting
It's a disgusting drop.
drop
Mhm.
right now. Wow. Woo.
Yep. Yep. So year to date, it's down 44%, or 43%. But the most of the drop happened within the last couple of weeks.
I think I said this on one of the shows before. I actually know someone who has $1 million
Oh my God. They
worth of United Healthcare stock, and I don't know what they're doing right now.
bruh, I would die.
They have $1 million worth of United
Wow.
Healthcare stock.
Well, 90% of their money just gone. That's crazy.
Not 90%. It's about probably
Oh,
about half. Probably about half.
50%.
Well,
Yeah.
another thing.
Depending on where they got it though.
Yeah, depend on their cost basis. I think they were an employee there, and they probably over the years accumulated
Yeah.
$1 million worth of shares.
Okay.
But this is one of the things that I will preach is if you work for a company, right? Whether you're retired or working for a company, if most of your wealth is tied into company stocks,
Oof.
you are playing a
That's
dangerous
a risky
game.
move.
That is a risky move. You are
Mm-hmm.
playing a dangerous game.
Mm-hmm.
And I might have said
Mm-hmm.
this a couple episodes ago, but diversification is so important when it comes
Highly.
to building your wealth. I've been in positions where I've worked with former employees of like Bank of America, and you would see people with like 90, 80% Bank of America stock in their retirement accounts.
Mm-hmm.
And I would tell them, like, yeah, I understand you've had this stock for so long, but you probably want to diversify. Like, you're playing a very dangerous game. So if there's anybody out there where you get a lot of, company stock, where it's either a grant or you've accumulated a ton of company stock over the years, when you start to look at the percentage of how much that has on your overall portfolio of investments, when you
Mm-hmm.
start getting to like over 30%, 40%, you might want to start to look at diversifying
Yep.
because you're basically living and dying by that one company.
Yep.
And you might say, oh, I know the company, I've been here for years, blah, blah, blah. But you're always one headline away from just
One.
you're always one headline away from. I mean, look at man, Silicon Valley Bank, gone.
Yeah. Gone
Look at First
completely.
Republic,
Gone.
gone completely.
Mm-hmm.
So yeah, I preach that, man. I preach that a ton. Unless you're like the CEO of the company, there's no reason why you need to have 40, 50, 60, 70% of your wealth tied into company stock.
Right. Right.
It's a dangerous game to play. So
Yep.
just want to
Yep.
put that out there.
So take that with a grain of salt, y'all. I mean, like literally, the company that I work for, they are offering some buyout, like not buyout, but they offering like discounted stocks basically. So one of the first thing I did is I went to talk to our, they call him something officer, like I forgot what they call him, but you can go talk to them about the stock and what the rules are and all this different. Just I just wanted to understand it a lot more. And I was like, I can't do this. And he was like questioning me, like, why can't you do it? I was like, this is not going to be good for my portfolio. I'd rather keep what I have right now. So again, analyze your positions when it comes to those 401ks, analyze it, because it's like you do not want to expose yourself too much.
Yeah, you don't want to be overexposed. I'm not saying don't buy company stock. If you get a discount offer to buy company stock, or if they offer company stock within your 401k and you believe in the company
You believe, yep,
and you feel the company is on a good trajectory, by all means, you know, accumulate as much shares as you can, especially if you can get it at a 15% discount.
yep,
That's a good that's a good thing. But to have 100%, 80%, 90%, 50% of your contributions or your wealth tied into one company,
Mm,
it's a dangerous game. So
facts.
diversification, man. When you look at bigger picture, diversification is so important because again,
Yes.
I mean, I'm pretty sure there are tons of United Healthcare employees kicking themselves if they didn't say, man,
Mm-hmm. They're definitely stuck basically right now.
yeah, you're feeling the pain right now. So
Yep.
yeah,
All right, moving on to the tariffs. So on May 12th, 2025, the reason why we here and the reason why the market is running, the United States and China announced a significant 90-day tariff truce and to de-escalate their ongoing trade tension. This agreement, reached after negotiations in Geneva, involves substantial reduction in tariff imposed by both nations. Now, I know we talked a little bit about that a few weeks ago, where it's like, is there a talk? Is there not a talk? Are we having a conversation? But it looks like the Geneva Convention kind of provided a time for all the countries to come together and they were able to make a deal there. Because I don't think anybody from the US was going to go directly to China, and nobody in China is going to come here. I think they wanted to find a middle place, a middle ground that they can have a conversation on. So basically, the 90-day tariff is as follows: the United States agreed to lower its tariff on Chinese goods from a peak of 145%, which is ridiculous, to 30% for 90-day period. Now, China also committed to reducing tariffs on U.S. goods from 125% to 10% during the same time frame. So for the next 90 days, there's still tariffs. There's this. It's not like it's gone. It just 30% versus 145, and then 10% versus 125%. Now, again, the market response to that was crazy. I mean, we saw S&P 500 surge by 4%, and the VIX actually dropped. I was watching the VIX the whole time. I was like, oh shoot,
yeah. If I'm
the
not
VIX actually
mistaken,
dropped.
yeah, the VIX is under 20 now. I think if I'm not
Mm-hmm.
mistaken.
Mm-hmm. So yeah, I mean, let's talk a little bit about that in terms of like all the companies that actually ran on this, right? So if you look at the sectors, they actually kind of like ran on all this news. For example, information technology was up like crazy. All the IT, all the information technology was up. Financials was up. Consumer discretionary was up. Industrials was up. Utilities was up. Like those, all of those companies was up. Um, so Wale, what is your opinion on this pause, man? I mean, I don't know if we, like you said, we probably will see the effect of the inflation still, even with 10% and 30%. That's still significantly high, but we shall see in the next couple of months how that looks like.
Yeah, the way I look at it is as far as a decrease from where it was to where we're at now, that's a substantial move
Mm-hmm.
lower, which is good. The question that everybody's going to have is between now and the 90-day pause, do you eventually get to a trade deal, like a formal deal where you can sign and say, this is what we're going to do?
Yeah, yeah,
Or do you do like another 90-day pause? Because this is what the second 90-day pause we've heard
yep,
since April. So we had the Liberation Day, we had a 90-day pause, and then we got another 90-day pause.
yeah,
So what happens after that, I do not know. But the market's response to me tells me two things. Now that we've pretty much recovered all of our losses, no one looks at this as a bad thing, even if it's temporary. It's better
mm-hmm.
than where we were. So progress in the right direction. And two, the consumer hopefully won't be hurt as much by these numbers. Now,
Right,
over the next 90 days, obviously there's still a tariff in place. Does consumer spending slow down is what we just have to wait and see. And we just have to continue to look at the data. I'm pretty sure the Fed is going to be looking at the data. Companies will be looking at the data. I think
right,
tomorrow we get PPI as well. So we'll see what happens with that. But I still feel like we're not at a trade deal yet, but I can't, I don't see a catalyst behind why the
Yeah.
momentum of the market is going to slow down anytime soon. So,
Right, right. I mean, the Trump. Somebody did ask Trump that question, like, what is the the overall plan? And he said that the hope is to reach a deal with China and be able to open up both the U.S. and China to be able to trade friendly. Now he brought something very important though, where he said that is the U.S. has always been open to China. I mean, if you think about it, right? We always been open to China because all our product literally come from China. So from
mhm,
the U.S. perspective, the port has been open. China's been sending
mhm,
stuff over here. Product been making in China. But if you go to China, the opposite is not true.
mhm,
The Chinese government have always blocked the U.S. from conducting like a full on business with them, right? Because you don't see a Chinese company operating in the U.S. and sending their product back to China. That's not happening. You know what I mean? If you think of case of like the Facebook or all the social media and all this stuff, those things are very restricted in China. You cannot. In Facebook is very restricted in China. I think Google search is restricted in China. A lot of things are restricted in China that's actually a US based companies. You know what I mean? So it's like he's right about like the China not Chinese not being open to doing like businesses in terms of that and on a globe on a crazy scale. Like we're able to adopt TikTok here like crazy. I
mhm.
don't think Chinese is able to adopt any of the social media that's made in the US, right? So again, I think he has a point into like, hey, if we're gonna open up the US, you guys need to do the same thing when it comes to China. Open it up a little bit for us, to be able to trade back and forth, be able to have a better trading agreement and stuff. Now, is that gonna happen? I don't know. We shall see.
I also, to be honest with you, I don't think that Trump is going to take off any of the tariffs that are on the outside countries. I
No.
think I think that most countries that are sending products into the US, there's going to be some sort of tariff because I'm looking at the revenue numbers that the tariff is bringing in on a monthly basis. And the goal, at least for the Trump administration, is to use
Mhm.
that revenue to cut down the deficit. So I think that most of the tariffs that are in place now are going to stay
They're
in
gonna stay.
place, but I
Yeah.
think that the level that they're at may be reduced. Um, but one of the things that I'm trying to figure out is if they plan on cutting taxes, right? Because the US has two
Mm.
sources of tax revenue, tariffs and taxes on businesses and individuals.
Yep.
If you're going to lower taxes, why would you lower taxes if you're trying to cut a deficit? Because you're basically just lowering your total revenue.
Yep.
So unless he feels that that revenue will be made up by the tariffs, I don't know. But yeah,
That
the
didn't
amount
that that didn't really
the
come up though. I think the taxes that I heard so far is taxes on people who's making like over $1 million or something like that. But
okay.
I haven't heard any taxes on reduce on business, which is crazy. Yeah, I haven't heard that.
Yeah, we'll see. But you know, the tariff, the amount of tariffs that are coming from all of these countries importing goods, I'm pretty sure worst case scenario, everybody's probably going to pay like 10%.
Yeah.
I'm almost certain that no one's going to pay zero.
Hmm.
No one's going to pay zero. So
Which
yeah,
is good.
because
I mean, it's good to bring some money in, but again,
especially with a third. Now, I will say this: they're trying to lift the debt ceiling by another $4 trillion.
oh my god. So just moving the goalpost basically.
So that I don't know. A lot of stuff is being count is looks counterproductive when you do the analysis.
Yeah.
I will also say this that in amidst all of the market moving higher, bond yields on the long end of the curve are also moving higher,
Mm.
which still means that it's getting more expensive for the United States to issue debt.
Yep. Yep.
So, and to me, I will say that if you're gonna raise the debt ceiling from 36 trillion close to 40 trillion, to me, I think other countries are looking at that saying, yeah, this is not good. So if your how should I put it? Your probability of default and the risk that we're taking by buying your treasuries is getting riskier. So we need to be compensated. That might be why
Yep.
treasury yields are going up. So I've been paying attention to them. Um, And I want to say the 30 years almost at 5%. I think the 10 years at 4.5%. So that's not necessarily good.
Mm-mm.
No.
Man. The other thing I want to talk about is Boeing, man. So it looks like President Trump is about to get a $400 million Boeing, the newer version, as a gift from the Prince of, I think it's the Saudi Arabia Prince or something like that.
I
He's
did. I
about,
think I think it's Qatar.
but he's about to get a $400 million plane that he wants to use as the Air Force One, and it's causing quite a stir for a lot of people in terms of like security, in terms of retrofitting it to actually do what Air Force One does and all this stuff. Air Force One plane is very old, by the way, but it is equipped with some of the state of the art technology in there. It looks very old from what I heard from the inside. It looks very old, hasn't really changed over the years, but it is very secure and it has a lot of other things that needs to have. So there's a lot of debate going on whether he should accept that or not. I was like, I don't really care if the man accept it. But look at what's happening to Boeing, man. I know we talked a lot about that from one time. They were like at 128 to now they're over $200. We missed that trade big time.
I talked about this trade like all of the end of last year and did not pull the trigger. And I think they got a commitment. I think it was from Saudi Arabia to buy like
Yep.
30 planes.
Yep.
So I know Boeing did not close at the highs, but Boeing has been on a very, very, very upward trajectory all of
Mm-hmm.
April. I
Yep.
mean,
Yep.
and as we said before, if you want a commercial jet, you got two options. You either buy it from Airbus or you buy it from Boeing.
Yep.
And it looks like Boeing is starting to get more orders for their planes. Now, I will always say this is can they deliver on when these planes need to be delivered? We don't know, but there's a backlog and there's orders coming in for their planes. I think the British, also UK, also British
Yep.
Airways
Yep.
also
Yep.
made a commitment to order some Boeing
Yep.
planes. So,
Yep. Yep.
man, Boeing has had a lot of good news in their favor over the last couple months and
And they
yeah, I
needed
am
it though. They
yeah,
needed
they
it
needed
very
it.
bad.
Yeah.
Yeah.
I am disappointed that I just sat there and did absolutely nothing.
You and I both, my brother. I was like, oh man, because we saw when he went to like 130. I was like, okay. Then
Yeah,
he
we were
went to
talking about it
140.
over the 130s and did
and
not pull
then
the
and then
trigger.
we're like, hey, it's getting close to 200. It still didn't do it. That's crazy, man. That's a trade. That's a trade of the century right there
Yeah,
that we
that's
missed
that.
out on.
Yeah.
So we saw on the news that, I think we talked about it last week also. The Trump administration is committing to accelerating building nuclear plant and all this stuff. And we saw Oklo and most of the nuclear energy companies kind of just start taking off again. Thoughts, comments on that?
So I want to point out a couple of things that I've been preaching to the choir over the last couple of months
Yes.
is that when you look at the whole AI story, right? When you just look at it from a high level, the most important piece of um, the most important piece outside of just the chips that are needed is the energy needed
Energy.
to
Yes.
keep these data centers running 24/7. So, a couple of things that I wanted to point out. Number one, look at NRG. They reported earnings this week. That stock was up almost 20% after their earnings report. I mean, just go look at that gap up. The stock went from what is that? 120 to about 158 in like 3 days. So natural gas, right, is going natural gas is going to be needed to power some of these data centers, right? So
Right.
there is a demand for natural gas. The only thing with natural gas is not considered clean energy. So nuclear is clean energy. I don't think that nuclear is going to be the solution to power most of these data centers, but there are going to be data centers that will have to tap into nuclear energy in order to provide power based on where they are built. So,
Mm-hmm.
two companies, right, that have seen really big gains over the last couple of months, or I say the last couple of 3 days. SMR,
SMR. Yep.
SMR reported earnings this week. That stock was up like 20%. Um, Back after Liberation Day, that stock was trading at about $11. So basically, in a month, the stock is doubled. They had a
Doubled.
really
That's
good earnings report
crazy.
this last earnings. And basically, what that's telling me is that nuclear energy is going to be in demand.
Mm-hmm.
So the technology that a lot of these companies are tapping into for nuclear is the small modular reactors. Oklo, another player in the nuclear story, and I've been riding Oklo since it was like
Bro.
$5.
Yes.
Oklo had an earnings report yesterday. Now they are not a revenue producing company yet, but it doesn't seem to be any roadblocks based on their trajectory to go operational by 2027 at this
Right.
point. That stock was up 15.5% today.
Yep.
So to me, again, as we're starting to look at where some of these data centers are going to be built and how they're going to be supplied with power, nuclear and natural gas seem to be the two most important um, pieces of energy that they're going to be needing. Now, some data centers will probably be powered by traditional energy, right? So the traditional grid. But again, I've been saying this. I don't think that the United States grid has the ability to support the all the demand that
I don't
these
think
data
so.
centers are going to need. Because remember, data centers run 24/7. So anytime you type a prompt into Chat GPT, your information is going to a data center
To a
somewhere.
data center. Yep.
So as the demand grows, you're going to need more chips and you're going to need more energy.
Yep.
So
Yep.
when we
Yep.
look 2, 3, 4, 5 years from now, you're probably going to be looking at um, higher energy output. And a lot of these stocks that are supplying the energy for this, to me, I think they're also going to be higher. So, I am riding that gravy train until something happens, like let's say regulatory shutdown, the technology doesn't work anymore.
Right. Right.
But until I see something of that nature, I am riding this gravy train. So
Man, and I think future wise, I think focusing on nuclear energy is very important, right? Because it's like, again, like you said, as the demand increases, more and more the data center need to be created. They need to have the cooling mechanism in place. They need to have a powering mechanism in place, and this is what a lot of those companies are going to turn into. So, and again, somebody was asking me today, like, why didn't you buy the options in the Oklo? So I was like, I could have, but it's like I like to play it safe with this one because, again, we didn't think it was going to run from $5 to like almost $60 in like less than a year. You know what I mean? Like, so again, it's like it's one of those plays that it's a long term play, and when it comes to long term play, I'd rather do the stocks itself, and it was cheap. It was like $5. It was less than buying option contracts. So
yeah, I looked at my cost basis. My cost basis on Okla was $6.11.
see, that's cheaper than buying the options. You can rack up on those, and every time it goes up, like yeah, you
See,
know,
the thing I'll also have to say is if you're planning to buy leaps, right? Nothing wrong with buying leaps, but you have to remember that decay is involved
decay.
with options.
Yes.
Whether you buy a month out, 6 months out, a year out, 2 years out, there's always going to be some sort of decay.
Yep.
So, in my opinion, if you're playing leaps, you're better off buying into strength as it's moving
Just moving up.
higher.
Yep.
So with shares, there's no decay. So you can hold this thing for as long as you want. But
Yep.
I have shares in leaps. And my leaps that I had before the whole Liberation Day thing, I mean, they got absolutely crushed.
Yeah, smack. Yep.
They got smacked. So,
Mm-hmm.
but because they don't expire until 2027, I've been able to average down
Yep.
over the last couple of months, getting more leaps at a cheaper price. And that has ended up being a good thing. So if
Yep.
you're going to buy leaps, to me, there's two ways to approach it, right? You can put a stop loss at a point where you feel comfortable getting out and maybe trying to re-enter. Or if you have a year, 2 years out, as it's coming down, if the momentum or the story shifts, then you can start to add to your position. So, some of the leaps that I've had that got smacked, Tesla,
Mm-hmm.
Nvidia, Oklo, and TEM. So all of those leaps, I think at one point earlier this year, because of all of the BS from the tariff headlines, I was down like 60, 70%.
Yeah.
And these are
Yeah.
leaps that don't expire until 2027. So,
But you were comfortable. You wasn't
correct,
panicking because you
correct.
know
So
you
you
still have
have
time
you
on it.
have to be committed to the process of saying,
Yep.
okay, I'm down X%. Time is on my side.
There you go.
Am I willing to average down and stay in this trade?
Yep.
Because, usually when I buy leaps, I'd like to give myself minimum 12 months, if not more. 24 would be ideal if you want to stay in a trade. But again, don't think because time is on your side that a big move down is not going to hurt you. You can
Right.
get hurt.
Get
But if
smacked.
you have a strategy behind whether or not you're going to stay in, things can turn out good in your favor if you're patient. So
Yep. Yep.
I
Yep.
was willing to average down. Fortunately, it paid off. So, but the fact that I had time made me comfortable with making that trade.
Right. But this week also proves all the stuff that we always talk about. Like when the sell-off is happening in the market, do not panic. Look at the right ones that's not, it's like if something doesn't make sense that is dropping, that's something you should be looking at. You know what I mean? And we saw a lot of things drop that doesn't even have to do anything with the tariffs, right? And now you see them all moving up again. So if you really would have paid attention from the time we start talking about tariffs after Liberation Day and all that stuff, you just start accumulating some positions. Look at this week alone. You would have made all your gains and then some. You know what I mean? Like literally, you know. So again, not panicking. Just don't pay attention to all this crazy headlines about the stock market falling off the cliff and all this stuff. Those are a great time to run to the market and buy. You
So if
know.
you think about, I mean, and we had been saying this since March.
Mm-hmm.
We've been saying this since March. If you think about what drives stocks in the long run, you always have to look at earnings and revenue growth.
Yep.
Is the business broken, right? If the if the business is not broken and the sell-off is caused by headlines or some sort of catalyst that could be temporary in nature, look at sell-offs as opportunity,
Mm-hmm.
right? Opportunity to buy good companies at cheaper prices.
Cheaper price. There you go.
Because if you look at, how should I put it? If you look at what has kind of happened with the whole tariff headline, there are some companies out there like retail names like Nike, you know, I think Lululemon might be out there as well, if I'm not mistaken,
Yeah.
that are going to be directly affected by a lot of these headlines because it directly affects their business.
Yep.
But one of the things that we had said since going into this year is think of like software companies, think of um, um, cybersecurity companies. I mean, go look at Planeteer.
Yep.
Go look at Planeteer.
Yep.
Planeteer after Liberation Day went from dropped to a low of $66.
Yep.
Planeteer is now trading at an all-time high of $139, or
Yep.
it hit an all-time high of $133.
And all of that happened within the past
the last month. Go look at
Yeah.
CrowdStrike. CrowdStrike
Mhm.
dropped to about $300. CrowdStrike is now trading about $435. So, in my opinion, right, and we say that you're not going to time the bottom. Like, I don't
Mm-mm.
think anybody timed the bottom. I'll actually give, I'll actually give one story. I don't think
Mhm.
anybody timed the bottom directly because if I'm not mistaken, even after that 90-day pause pump we saw, the market still pulled back.
Yep.
Like we still saw one, two, three, four, 5 straight days of a downturn after that announcement before we saw the next run higher.
Mhm.
So again, when you see these crazy drops and these catalysts, just know that this is temporary. Let me look for good companies to buy, right? That I can hold long term because again,
Facts.
their business is not broken. I mean, I don't. I mean, I scooped up Nvidia around $88, $89 a share.
Yep.
We're at 135 now. Um, I mean, there's just so many different companies out there that you probably could have like bought at ridiculous cheap
Cheap
prices
prices. Yep.
and have been paid handsomely if you had been strategically buying on the down days.
Yep.
Like
Absolutely.
I mean, if you've been dollar cost averaging over the last since October, I mean since March, I mean you are in
But I mean,
wonderful
we
state.
talked about that though. It's like, hey, this is the time to start deploying little by little, right? Like literally, if you were deploying little by little, like this week, you was rewarded handsomely for your patience. You know,
I know
so
one person though that made their annual 401k contribution to their portfolio on
that's crazy.
April 7th.
That's crazy.
And I asked them, I said, what does your portfolio look like now? And they're just like, I can't even believe it.
Yep.
And the only reason why they put it in that day was because they were out of town and they were about to travel. And I think they only you had until I think April 15th to make your contribution for the year
For
prior.
the whole year. Yep.
So they were like, I got to get this in ASAP. So they were just like, I'm just going to do it today. You talk
Man.
about to me that's a little bit of a luck involved there,
But
but
still, like April 7th, whatever April is, like the stock was trading at low numbers then. So he bought it at the right time. That's crazy. That is
so
crazy.
yeah, but
Man.
I am surprised. I'll be honest. I am surprised at the speed at which this market has recovered.
Mm-hmm.
Did I think it would eventually recover? Yes. Did I think it would recover in a month? No,
No.
not at all.
Nope.
Not at all.
Yep. Yep.
But yeah, this is why I always preach don't try to time the bottom of the market. Like don't try to time it because it will frustrate you.
Yep. Yep.
But if you're strategic about deploying cash on red days, on stocks that you like, on businesses that you enjoy, I mean, take a look at Amazon. Amazon was trading at 160
Yep.
at one point. Now it's at one, no, I said 210. I mean, I don't know a stock that hasn't really made a full blown recovery
Yeah,
from the
I was trying to see all the stock that's still below 200. I mean, you look at like things like Nike, Starbucks. I mean, those are still kind of like below this 90
yeah,
day.
businesses that have big exposure to China.
Mm-hmm.
Those stocks to me are ones that may still be affected.
Yep.
Now, Nike, the one thing I'll say about Nike is not only going to get hit with the tariff news, but they're also a broken business.
Yep.
Nike's
Yep.
business is broken.
They have a
Like, let,
lot of work to do.
yeah, they got a lot of work to do. Starbucks is also another business that's in
Another one.
recovery mode.
Yep.
So, those names, are going to have a tougher. Are they going to recover? Yes, but they're going to have a tougher time recovering than some of these other names that don't have big exposure to China.
Yep. Yep.
Um,
Yep. Yep.
Especially those stocks that don't ship physical goods. Like a lot of these software companies out there are just, I mean, look at TSN. TSN was trading under 140. We're at one almost 200 a share.
Mm-hmm. So
Crazy.
yeah,
So
some of those companies, like if you were to pay attention, those would have been the places to go. You know, like a lot of those software companies that just didn't make sense for them to drop because of tariffs. It just didn't make
tariffs.
sense. So yeah, but going on to next week, man, we have some earnings coming up. I mean, not a lot, but we have Home Depot that's reporting. Palo Alto actually reporting next week.
Mm,
Baidu, Snowflake. Looks like all the cybersecurity ones are reporting next week. Then we have Zoom, Autodesk also reporting. PDD is reporting. PDD is a Chinese company. I wonder how this is going to be affected because they own, what do they own, Shein or Temu?
one of those.
Yeah.
Yeah, they
So
own one of those.
I wonder how they're going to be affected by that. But those are some of the notables earnings coming into next week. And then some of the economic calendars for next week. Let me see. I don't see anything notable here, honestly, for next week. It looks like it's going to be a quiet week. Yeah, there's nothing crazy except maybe like existing home sales, residential home sales. Not a lot of not some big major data coming out next week. So it might be a quiet week next week.
Yeah.
But yeah.
And,
So
unless China comes out and just says, yeah, we're going back to 125.
yeah. Or we come up with a good deal with them and then, cancel
Yeah.
everything.
Yeah, that's true.
Yeah.
I will say this though, we had Coinbase added to the S&P 500. I think Discovery
Yes.
Financial is getting booted.
It's going to be booted. Yep.
And then we saw news today that Dick's Sporting Goods is making an offer for Foot Locker for $2.3 billion.
I
Go.
don't know, man.
I will say this though, someone, an insider,
Uh-huh.
bought Foot Locker options before the deal was announced.
They knew it was coming. What is the Foot Locker trading at right now?
Go look at that chart. Just go look at the after hours.
Let's look at the after hours. What's happening?
Go look.
That's crazy, man. I didn't think Foot Locker was still in business, honestly. It's like,
Go look at that
oh
chart.
my God. I have never, ever. This is
I think
crazy.
at the high it was up 67%. And I saw a tweet that
67%.
someone supposedly bought options. Let me read the details
What?
behind this trade. So just give me one quick second to read the details behind this trade. But this is crazy. All right. So
Somebody knew.
shout out to Unusual Whales for this post. It says, all right, I'm pretty convinced that someone traded this Dick's Foot Locker acquisition beforehand. Check this. Foot Locker options are very thinly traded, zero volume. I know that for sure because in the past I've tried to trade them and I could not get out of a trade with a good price.
Mm,
Today, coincidentally, Foot Locker had its most option volume over the last 60 days, as well as the highest net premium this year. Today was 20 times the volume as yesterday.
that's
Weird?
ridiculous.
What's worse is that the two most active options were traders buying the 15 calls expiring June 20th and selling the $10 puts. You can see over the last 60 days, people were buying Foot Locker 15 calls and never exited their position. They will be up likely $10 million tomorrow. The $10 puts that they sold will expire worthless. The worst thing about this is that they sold the Foot Locker $10 puts expiring in 247 days. So they collected $1.7 million in premium. That will be free money for them. You can
Dang.
see in our whale strike premium chart, the $10 strike explodes in bullish activity because of this trade. This is likely one of the most egregious cases I've ever seen. If you are wondering if people could have followed it, yep, our flow signals alerted all bullish moves on Foot Locker over the last 7 days. So clearly someone knew and clearly someone traded it. Now let's see if the SEC does anything
They ain't
because
gonna
to
do.
me,
They ain't
that's
gonna do
clear
nothing.
insider trading.
They ain't gonna do nothing. They're probably in on it too. Shoot.
Let me look and see if there are any big positions that were
Yo, that
executed
is
today.
crazy.
Can you imagine?
That is
Yeah.
ridiculous.
Oh yeah, lots of put selling today. Lots of put selling. Oh my God. The January 16 $10 put. Yeah,
And people are buying.
tons.
Who is buying those puts though? That's what I want to know. Like, who's actually
Probably
buying?
market makers. Probably market makers. Because you understand that market makers are in the business of providing marketability for certain securities.
Right, right.
So they would probably happen to sell. Ooh, they gonna get eat it. They gonna get ate up.
They
They
whoever
gonna get ate up.
whoever bought that,
Ooh, 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 ooh.
bro, they're probably like, who's this idiot selling puts on Foot Locker?
Yeah, the January 20th 15 calls, those were getting tons of activity. I mean, I'm
That's
talking about
crazy.
multiple hits
That's
around
crazy.
$70 a contract. I'm gonna look at those tomorrow and see where they open. But
That's crazy.
somebody's gonna be really, 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 really rich tomorrow.
Yeah. The other one is United Healthcare too. Like
Oh yeah. Yep.
1 minute before the market closed, somebody came in and bought the 280 put for $3 million.
Woo!
Yeah. Where is United Healthcare right now?
280, 286.
I mean,
Yeah.
even if they get 300%, they just made $6 million.
I mean, look at this. Oh my goodness. Hold on. Let me do the math on this real quick. Is this a spread? Let me see if I can see a non-spread. Oh,
God
yeah, somebody
damn.
bought 4,120 contracts of the May 16 390 put for 8,000 a contract. 8,210 contract, $8,220 times 4,120. Somebody somebody opened a $33 million position
And
on
what?
UNH
As a
five
put?
minutes 5 minutes before close.
Yep, they knew something was coming. Because right after that, the investigation dropped. That's when they announced the
Wow.
investigation. So again, insider trading. I'm telling you,
The SEC is absolutely useless if no one
they
goes to
are
jail.
so useless. Like,
If no
what?
one goes to jail for this, this
What?
this order literally came in at 12:55 p.m.
And they do this stuff on purpose too, because it's like, let me do it
Five
right before the
minutes,
market close.
5 minutes before market
And
close.
hopefully not a lot of people pay attention. So that way it doesn't draw any attention. That's crazy, man. I
And the
won't be
cra-
surprised if the CEO actually did that.
and the crazy thing is, if I'm not mistaken, there's another order attached to this one for another um 6,700 contracts. I don't know if it was a buy or a sell, but regardless, this order was beyond, like, this is crazy.
Yeah,
Wow.
people making free money right now. This is just
Wow.
free money.
Do I need to buy the unusual well software so that I can be in the know?
Hey, it's only $50, so
I might have to jump on that gravy train because yeah, and I think
we should just do the API. They have an API that's directly to the Discord, so maybe we
oh
can do that.
really?
Yeah.
Yeah, and I'm pretty sure someone did the same thing with Coinbase
Oh yeah. Oh yeah.
before it got added to the S&P 500.
Mm-hmm. It was literally right before the market closed. There
Woo!
was like an unusual options buying on Coinbase.
Yeah.
That's crazy, man. That's crazy. Well, we know what's happening there, and it's happening all day, every day. The only thing is, some of them we catch, some of them we don't. But it's happening all the time. Somebody with inside information, they act upon it,
Yeah.
and they will suffer the consequences or get slapped on the wrists and pay some fine. But
Yeah, pay
if
pay
you make it,
pay.
if you make it $100 million, yeah, fine me $10,000. I'll pay that. I
Yeah,
don't care.
someone said in the chat, did you say 33 million? Yeah, 33 million dollars in premium.
Crazy, man.
33 million dollars in premium.
That's
So
crazy.
yeah, that is an egregious amount of money.
Man.
Had to be a hedge fund. Had to
Yep.
be a hedge fund
Yep.
because I don't know many retail investors that got $33 million just
No,
lying around.
no. That's a retail, not a retail. That's an
Yeah,
institutional type of trade.
that's an institution type of trade. That's
Yep.
on some I don't know if everybody what's that one HBO show with Bobby Axelrod.
Yes.
What's it called?
Um, I know exactly.
Billions?
Billions. Yes.
Billions. Yeah.
Yo, you guys gotta watch that. That would teach you a lot about the stock market. That the inside of things that go in the stock market. That's how I learned
Yeah.
about family. What do they call them? Is it family business or family investing? Whatever. Where you can only invest after like a
It
hundred
might be a
million.
little exaggerated.
Yeah.
Uh, yeah, I think it might be the show might be a little exaggerated, but it definitely gives you a
Eh,
little insight
Yep.
on what
Yep.
goes on behind these
Yep.
like quants and hedge funds that trade on just looking at data.
Yep.
So,
Yep.
but yeah,
If you
crazy, crazy,
if you can
crazy.
ignore all the other fillers that in there, I think you can get
Correct.
some really good stuff from there.
Yeah.
Yeah.
So,
But with that being said, man, next week, bro, any advice going to next week at all? Well, actually, finishing this week at all. I don't see anything crazy coming up on the news, but you never know. President Trump is still traveling around the world,
hmm
talking to different countries and stuff. I think he was in Saudi Arabia, he was in Qatar, he was in what's the other place? I think he was in other one was no, he wasn't in Syria, but he did say that they're gonna lift some of the sanctions that's on Syria, and that also is a crazy story. You guys should go read about that because Syria just overthrew their ex-president like maybe like a few months ago, and the guy that actually overthrew that president was one of the most wanted by America. And all of a sudden, that bounty just disappeared. He no longer wanted. He's over here meeting with the French presidents and all that. So it's a crazy story. Something out of like the I don't know sci-fi movie or one of those crazy action movies. Go read about it. It's very interesting what's happening. But
so I want to leave on this note.
mm,
Um, so I know coming into this year, right? There was a lot of grumblings around when President Trump won and was going to be president. And people were like, oh, I'm not going to, I'm taking my money out the market. He's going to do blah, 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 whatever. I will say this: do not let your political bias dictate
yes,
how you invest. Do not do it because this is the second time that if you were someone who said that I'm not going to invest because of Trump, you've probably missed out.
yep,
Do not let your political biases dictate how you invest, regardless of who's in office. Democrat, Republican, Green Party, monkey, I don't care. Robots, I don't care. The market will move based on earnings and growth in the economy.
yep,
Those are going to be your drivers.
yep,
So staying invested, blocking out all of the bias and political noise, and just sticking to a strategy,
yep,
you will be better off than trying to let your emotions dictate what you're going to do.
absolutely,
Because now there was a lot of panic earlier in the year based on where stocks were and where they ended up going at the end, at the after Liberation Day.
mm-hmm.
But as an investor, a long term investor, if you stuck to a plan, stayed invested, deployed cash strategically over time, you probably ended up in pretty good shape.
Yep, yep,
So I will leave you at that.
yep,
Don't let political bias dictate how you invest. Stick with a long-term strategy because the market is going to do what the market is going to do, whether you like it or not, over the
Absolutely.
long term. And it's your choice of whether or not you want to get left behind or not.
Absolutely. Nobody
So,
said it was going to be pretty,
no,
but
it's not always going to be pretty. I will
yep,
say that it's not always going to be pretty because COVID was ugly. This was ugly because if you look at where we were from all-time highs to where we ended up, that was a nasty
yep,
drop.
yep,
But fortunately, it was very short-lived.
yep.
I
Very.
mean, you're talking about erasing all of the losses for the year on QQQ and almost all of the losses on SPY.
Hmm.
I mean, I don't know what else to tell you.
Yep. And that's some wise words, man. You gotta have a good emotional intelligence. Like, if
Yep,
you can separate your inner feelings and focus on like the stock market, like ultimately you will put yourself in a better position financially. You put your family in a better position financially because this is the game. Unfortunately,
yeah,
this is the game. Like there's no way around this. Like this is even people who make a lot of money in their businesses. Guess what? They always end up in the stock market. They always end up here. If you're in real estate, guess what? You're always gonna end up in the stock market because that's one of the best way you can hedge against inflation and all this crazy stuff that's happening. So at the end of the day, I mean, look at Tesla.
yeah.
Everybody was complaining about Elon all this time. The stocks, yeah, dropped, but look at it right now. You know, look at it right now. It's like you gotta take your mind off of like um when
All all the
I'm saying that this is when it comes to the stock market. Try to take your emotional um
your emotional bias out of that.
just take it out of it. If you want to be a good trader, if you want to be a good investor, you have to remove those biases. You have to. Otherwise, yeah, you're not gonna last long.
And the thing I always say is if you're somebody who doesn't want to have to pick individual positions, you can always just buy the index. That is always an option. Start with an index. VOO, BGT, QQQ, SPY, like those are going to be your best friend if you're somebody who says I don't understand it. I just want something. I want to simplify my investing strategy as much as possible.
Yep.
Those are four places you can look at to just deploy cash on a consistent basis over the long run. So I'll leave it at that. If you need help, like I said, we've been, our trading group, I've been in the game for a very long time, and we've got a lot of seasoned people in our group that will help you support. You don't have to be a trader. You don't have to be a trader
Yep.
because if you look at all of the names that I gave out, so let me read a quick, and I don't want to go too long, but we have a section in our trading group, in our investment group that talks about long-term investing. So this is what I sent out on what day was this? This had to have been in March. Okay. March 6, 2025. This is what I said. This sell-off will set up some long-term opportunities to buy good names when the dust settles. I said Oklo, BRT, CrowdStrike, TSM, and Palo Alto Networks are names that should be on your shopping list. This was March 6, 2025. You had plenty of opportunities all March, all April to deploy cash into these names. And if you look at where they're trading now, you're probably very, very happy. So,
Yep.
I mean, we talked about the SMR technology and all of the nuclear stuff. I sent
Yep.
this out in February,
Yep.
February 10th. I talked about the SMR business. I gave a synopsis of why it's important, even gave a website if you want to do your own research. I mean, yeah, man.
Yep.
I don't know what else to say. I'm
Yep.
literally spoon feeding you information to act on.
Everything.
And I'll also say is that if you're gonna join the group, be a participant and ask questions.
Yep.
Don't
It's the
just
only
stay
way you learn.
silent. Only way you're gonna learn. So
Yep. Yep.
I'll leave it at that. But
All right. With
all
that being
right,
said, make sure you guys connect with us on social media. Please follow us and subscribe. Tell everybody else to subscribe also. And yeah, we can't wait to have you guys next week. Until that time, keep your eyes on the market and your
and
portfolio strong.
we'll see you
Peace.
Friday.